It's a huge mistake to have over $1,000 in your checking account. Not only does it sit there doing nothing, but it can cause you to slow down your retirement and miss important opportunities. You should only have enough for about 1 to 2 months of expenses. But if you think otherwise, we'll show you 7 reasons why you shouldn't leave money in your bank account. Make sure you watch until the end to discover potentially the best investment you can ever make. Number 1. Start a business. It's not surprising if you're someone who wanted to start a business, but did you know it's one of the best ways to use your money in your checking account? For example, you can start with a small project, like a mobile detailing business, which you'd only have to work on a few hours every week to get started. If you have a bigger business plan you've wanted to work on, then that's possible too. For instance, let's say you wanted to run a small food stand. You could open it in a busy park on the weekends, and with some time and experience, it may grow to be something that can easily pay you more than your current job, allowing you the option to free yourself from your boring career. Number 2. Get rid of debt. Seeing large sums of money in your account can give you a sense of false comfort. For example, there's no doubt it's harder to give away $3,000 for a lump sum payment on your mortgage than to see $3,000 in your account. However, putting your money into hefty loan balances can free you from debt much sooner, and by being free from debt, you can save much more money in the future. Suddenly, that $3,000 may not seem so large when you see how much you can save when you're debt-free. When looking to pay off debts, start with those that have the highest interest rates, like credit cards, before you tackle the usual larger and lower interest rate loans like a mortgage. Number 3. Keep up maintenance on your belongings. Maintenance goes a long way in ensuring your items function the best and longest possible. Proper maintenance can also help you save lots of money down the road. By keeping up with basic maintenance in your home, like changing furnace filters regularly, or cleaning out the air ducts for your dryers, you can avoid huge repair costs and keep your house in great shape. The same goes for vehicles, like regular oil changes, brake changes, and general checkups. This can make your car last for decades, instead of having to buy a new car every few years and pay high insurance premiums. 4. Build an emergency fund. It's absolutely vital to make sure you have an emergency fund that covers 3 to 6 months of expenses. For those with variable incomes, like a freelancer, you should aim for 6 months, and those with a fixed income should aim for 3 months. Your emergency fund should be in your savings account that's easily accessible and only used for emergencies like losing your job or a major home repair like a furnace. An emergency fund can help you avoiding falling into debt and keeping you financially well off. Number 5. Invest in yourself. Investing your money is a great way to use money in your checking account, but investing in yourself can be just as profitable for you. There are many skills that can help propel your already solid career forward, like going to school and furthering your degree. You could also learn a new skill to help augment your current income, or even change careers for a better one altogether. You could also learn about the stock market and general investing principles to help you beat the market's average of 10% every year. The great thing is that there's so many cheap and free resources available. All you need to do is take the time to study. Even something as simple as reading a book to increase your skills and knowledge every month can make a huge difference in your financial growth. It's certainly a great way to make use of idle money in your checking account. Number 6. Invest your money. One of the best ways to use idle money in your bank account is to invest it. The reason why investing is so useful is because of compounded interest. This simply means that the more your money grows, the faster it grows. To illustrate with an example, if you put $3,000 into a fund like the S&P 500 that averages 10% per year, then after 10 years, you can expect to have $7,800. In 20 years, you'll be at $20,000. And at 30 years, you'll be at $52,000. While 30 years may seem like a long time, wouldn't you rather have an extra $52,000 by simply moving money from your checking account into an investment account? Number 7. Save for a home. While owning real estate isn't for everyone, it will always be one of the best investment choices anyone can make. Essentially, instead of paying a landlord who uses your money to pay off their mortgage, you can pay off your own mortgage and gain from the asset yourself. Typically, homes appreciate at a rate of 4% a year. That may seem small to the 10% of the stock market, but considering the price tag of a home, the money grows fast. For example, if you pay a $60,000 down payment on a $425,000 home that appreciates 4% per year, then in 1 year, you've already gained a 20% return on your down payment. And within 4 years, you've not only covered your entire down payment, but you're above it. If you have spare cash in your checking account, then consider saving up for a home. It'll undoubtedly be one of the best investments you could ever make.